trading. It's one of those words that just sounds complicated, right? You probably picture people yelling on Wall Street or these crazy complex charts that look like they're in a different language. But what if I told you that underneath it all, it's way simpler than you think? Today, we're going to pull back that curtain and show you how trading actually works.
I mean, seriously, you hear all the jargon being thrown around, bulls, bears, bids, asks, and it's so easy to feel like you're standing on the outside of some exclusive club just looking in. If that sounds like you, don't worry, you're in exactly the right place.
Yep, no secrets, no confusing fluff. In the next few minutes, we are literally handing you the keys to understand the core concepts. So let's just dive right in and start with the biggest question of all.
Okay, first things first. Before you can play the game, you got to understand the playing field. So what is the stock market, really?
The best way to think about it is like a giant, super organized marketplace. But instead of buying, fruits and vegetables, people are buying and selling shares. And a share is just a tiny little slice of ownership in a company. All of this happens on places called exchanges, which are kind of like the buildings where the whole market is housed.
And this right here is maybe the most important thing to get. You are not buying a piece of some abstract thing called the market. You are buying a small, tangible piece of a real business. When you buy a share of, say, Apple stock, you literally own a tiny fraction of that company. That is what's actually happening.
So, you get the concept. But how do you actually get into this marketplace? Well, you need a gateway. And today, that gateway is an online broker or a trading platform. Now, picking the right one is your first big decision, and here's what you want to look for. First, you want fees that are low and easy to understand. Next, look for a low or even $0 account minimum so you can start small. The platform itself, the app or the website, needs to be easy to use. And this last one is huge. You want good research tools to help you make smart decisions.
And what's really wild is just how much things have changed. Just look at this table. Almost all the big players have $0 minimums and zero fees for stock trades now. But the real game changer, especially if you're just starting out, is this column over here, fractional shares. This is awesome. It means you don't need like $1,000 to buy one share of an expensive stock. You can just buy a little piece of it for $5 or $10.
All right, you've got your platform, you're ready to go. Now the big question, what do you buy? And maybe just as important, when do you buy it? This leads us to the two big schools of thought when it comes to trading.
So on one side, you have something called fundamental analysis. Think of this as being a detective. You're digging into a company's health, its earnings, the whole economy, trying to figure out what that company is actually worth for the long run. Then, on the other side, you've got technical analysis. These folks are chart wizards. They don't really care about the company's profits. They are looking at price charts and data patterns, trying to predict where the price is going to go tomorrow or next week. It's all about timing the market.
This quote just sums it up perfectly. Fundamental analysis tells you what to buy, while technical analysis tells you when to buy. And here's the secret. They aren't enemies. A lot of smart traders actually use both. They'll use fundamentals to find a great, solid company, and then they'll use technicals to find the perfect moment to jump in.
Okay, you've done your research, you've picked a stock, now it is time to actually make your first move. Let's talk about how you place an order. Look, there are a ton of really complex ways to place orders out there. But to get started, you really only need to know these three. These are the basic commands you give your broker, and they give you control over your trades.
So first up is the market order. This is the simplest one. It's you telling your broker, hey, buy this stock for me right now at whatever the best price is. The good thing is speed. It's going to happen almost instantly. The small risk is that the price might wiggle a little bit in the seconds it takes to go through. Next, we have the limit order. This one is all about you being in control of the price. You're saying, I want to buy, but I will not pay more than this specific price. Or, I want to sell, but I won't accept anything less than this price. The only catch? If the stock never hits your price, your order just sits there and doesn't happen. And finally, the stop-loss order. You can think of this one as your safety net. You basically set a price below what you bought the stock for. If the stock ever drops down and hits that price, your broker will automatically sell it for you. It's a super important tool for managing your risk and making sure a small loss doesn't turn into a huge one. All right, let's bring this all together. We've covered the what, the where, and the how. You now have the basic building blocks you need to go from just knowing about this stuff to actually taking your first step.
So think of this as your trading starter kit. Just remember these 4 things. 1, you're buying little pieces of actual companies. 2, a brokerage account is your ticket to get into the game. 3,
analysis is how you figure out what to buy and when. And 4, order types are the tools you use to control how you do it.
See? We've broken down the how. It's not so scary, is it? But honestly, knowing the mechanics is only half the battle. The real question you need to ask yourself is, what's your why? What are your goals? What's your timeline? That's the question that will guide every single decision you make from here on out.